Aloha and welcome to Java. Thank you kindly for joining me. This is for Thursday. It's May 30th, 2024. There's a lot to go over. Yesterday was quite the day in the markets, so let's get started. Especially if you're new here, thank you for joining us. So our main risk indicator we like to watch is the MMRI. It went into extreme risk territory yesterday, so we are in the red levels. We also had the fear greed index as far as the stock markets as dropping farther into the fear levels. So what happened? Yesterday there were bond sales that happened or actually did not happen. And since there were a lack of buyers, they had to increase the yields in order to entice people to purchase these bond sales. So with that, the 10-year yield rose. Anytime the 10-year yield and the relative strength of the dollar rise, it puts pressure onto stock market. So yesterday when these treasury yields rose, and it doesn't matter if the Fed cuts, because even if the Federal Reserve cuts, they've still got to get buyers for this debt. That shook the market a bit. So these weak debt sales equal higher yield rates, and when that happens, it tends to crush the market. So we're watching a rotation to safe haven demand. So stocks are seen as risky. People are going back into basically the dollar, the US dollar. Surprisingly, gold did drop a bit. Gold is normally seen as a safe haven as well. We also watch cryptocurrencies pull back a slight bit. So I expect those to recover as well as gold and silver. They're coming back to what we call support levels. So with this bond market not doing very well, there were no buyers. Basically, we're having to buy back our own debt now. The market has significantly dropped. So less foreign buyers are in the mix, having to buy back our own debt. So at this moment, stocks still down. We've got the volatility index is up. So we could have continuation today, but we're going to hit into some support levels. So I urge caution on that. If you're thinking about shorting this market, you're shorting into support levels, which is not financial advice, but not recommended. We've got futures also showing weakness, however. So let's go into a few things that happened. We've got our calendar. We are looking at jobless claims, which I think are going to guide forward more for the Fed. We've got our core PCE prices that we're looking at this sold prior to market GDP and accrued inventory. So later in the day, we're going to be hearing from Fed Williams and speakers, and they will guide the market back to where they want it to be. So as I said yesterday, the Fed has two mandates. The first, price stability, and the second is employment. So if they're getting high inflation, they have to watch that. And as long as employment is seen as stable, jobless claims, job numbers, they can work on the inflation, hold rates as they are, and not do rate cuts. So yesterday played out as we thought. Prices right now are the biggest threat, and employment not yet. So we'll be watching those job numbers. Their action always lags. The Fed always works behind, basically in a cleanup mode. So right now we've still got the market fighting the Fed, but it did drop a bit yesterday. So we're getting the PCE inflation numbers prior to Friday's market open. So make sure you're adjusting your positions by the end of the day for that. So yesterday we had Abercrombie and Fitch and Dick's Sporting Goods did well, their retail sector. However, they did not reflect really what's going on in the broader sector of retail. If you take a look at McDonald's, Walmart, and Target, they're all having to cut prices to deal with the inflation and the lack of consumer spending. So, consumer income and spending have likely decelerated in April, and that's what they're going to be looking for. Yesterday, we have North American oil and gas mergers and acquisitions by the numbers because we had another deal announced with Marathon Oil. 2023, look at the increase overall is absolutely astounding. And this is maybe some of the last one because there's been quite a few mergers, acquisitions this year, but that's looking at oil and energy for the long term. Now, when oil goes up, it's inflationary across the board. As oil comes down, it's a harbinger of the economy slowing down. So, with this, we have the whole sector is weakening. That major indicator is an indicator of the economy shifting. We had another story with Ozark Bank, another smaller one. They got a double downgrade, and we're still going to have many more banks either merge or fold. They're simply going to go out of business and get purchased by the larger banks. Yesterday, we also heard from American Airlines. They gave the warning that basically they've got lower expectations for their summer travel, and it's the short haul flights, is what they call them. That means domestic flights are dropping, showing weakness in that mid tier consumer again. So they were downgraded just this morning, but they've still got their European, cross Pacific, cross Atlantic business class still strong at the moment. So we're watching the mid tier customer struggle. We've also got this story with Walmart. They basically stopped. Capital One is not the first card holder that they dropped, but now they are looking at doing their own credit card in what they're hoping to be a financial super app. So they may merge with a fintech, thinking more like perhaps Square or PayPal type, that might be the model for them. That's speculation. Let's see what they do. So jumping over to the European side, because with the central banks, they must all move together, because if they don't, it will crush the other currencies and trade. So we've got Spanish inflation up for third month. We've got German inflation edging up. So European Central Bank is in a bit of a position right now to where they cannot cut rates, because if they do, inflation goes up. They've also agreed to increase tariffs on imports of Russian grain. So, with these sanctions, they're trying to cut out Russia, but they're the ones that need the grain and the energy. So, they're increasing their own inflation, basically shooting themselves in the foot. So, we've got Eurozone economic sentiment rising less than expected. Well, how can it not? Because they're doing all of these things that are increasing their costs, increasing their prices, and their inflation is not under control right now. So ECB cannot cut at this moment. They're talking about June. We'll see what they do. Back in the United States, we've got the FDIC is reporting the number of banks, problem banks, increasing in quarter one. So they have a list of the banks that are highly exposed to what they would call toxic or trouble assets, but they will not release that list. So all of the upper end knows exactly which banks are going to fold, but they're not letting this out. So going with the Fed Beige Book showing modest economic expansion ahead of the GDP and inflation numbers. So their measure of economic expansion is not really inflation adjusted. So I don't think these numbers are really going to hold. We've got more information here. The United States banks still have a commercial property blind spot. So we've got calls on the other side saying the commercial property sector has bottomed. I don't believe that's true. There's much more. We're about to hit a time period where they must restructure their debt. And when they do, they're going to have another wave of commercial real estate loans coming due. And many of them will basically, the tide's coming out and going to see who can withstand this, so to speak, and who's been swimming naked. So term loans, credit lines for rights, real estate investment trusts. Add to this systemic risk, Fed stress testing should consider this type of lending, is what people are talking about, and also private credit. So with this, we do have some banks that their income surged on quarter one because of the requirements to hold reserves. But there's a lot of very weak banks, and there's enough to move the sectors. So with this, we've got the VA, or Veterans Administration, basically, urging mortgage firms to extend the foreclosure pause until next year. The VA holds a large sector of mortgage loans, of course, government backed. So we've got calls for the VA, Fannie Mae, Freddie Mac. Those are all of the government held mortgage debt. They're calling for holds. They wouldn't do this if that sector was strong. So this is another one that I've got. This it's not directly related, but it is in the financial sector. We've got the United States nearing a deal to fund Moderna's bird flu vaccine trial. Why is the United States government funding research and development for Moderna, who has done very well on the back of everything else that happened? Just a question to you, why your tax dollars are going to basically fund this, because if they make money off of this, you don't get that back. They're not going to refund your taxes. So with this, let's go into the other sector is government, which is really running the economy at this moment, and that is war. We've got the current administration could lift restrictions on Ukraine's use of weapons. Basically, this would allow them to start striking within the borders of Russia. And we've also got this senator. Basically, he wants to increase the spending beyond what was given. So this is Senator Roger Wicker, and he wants to increase defense spending from 3% to 5% of the U.S. gross domestic product. So this would add an additional more than $1 trillion per year. So what this will do is massively increase last year's debt ceiling, and he's a Republican. So we'll see how this comes out, but he's saying this is necessary in order to counter what they're calling the axis of aggressors. And namely, they've put in this boat is China, Russia, Iran, and North Korea. So with all of this spending, they want to increase this, put tactical nuclear weapons back in South Korea. So they're not going to take this. Russia is going to scrap the restrictions that they've had, self-imposed restrictions, since the last treaty agreement back in the 80s. So they're blaming the US that we're going to force them to start putting through nuclear strikes. So we'll keep an eye on that. With this, I'd like to go on something a little lighter. Get out of these pharmaceuticals if you can. Try and stay healthy. And one way to do that is growing your own medicine in your garden, understanding how to make herbal teas. And we've got certain ones that we go over here. The first one here is calendula. So it's got some alternate names, but basically this one is used topically, either on cuts, burns, skin irritations, put it into creams. And they also drink the teas. It's anti-inflammatory. It helps prevent your blood from clotting too much. So helps with if you're prone to strokes or something in your family, that would be a good one for you. And it also helps with blood sugar levels. It also has antioxidants, which fights cancer, and it helps with the brain. So with this, just want to go on a positive note. It was a great discussion we had yesterday, and I would really like to thank those that showed up for that. So with that, I wish you all a wonderful day. Try to become more self-sufficient, and that's a way that we can go through all of these things that they're doing. Stack silver, gold, real assets, and until I see you again, my friends, stay free.